with uh, I think my nest has done 3 and 5, which shall so you can see that another wire to root 4 is in place. View with a high level, and let's move on to the euros and the dollars and the dollars. I could still you see quite possible. Uh, all right, now it's being reconnected already, and I think we should be good with the streaming. So what I was saying was 725, 750 range is the 38.2% of the in sub-minute wave 3, and by all means it is quite a bit possible for price action to drop lower towards the 38.2% before inching higher again. Also, I think in the last session we had a quick view at the channel, and the Elliott channel is also slightly lower. You can see prices still a bit higher than where the channel is passing. So don't be surprised if the channel is being tested lower before it turns higher again, before prices turn higher again. All right, and another thing which would be more comfortable, it would have been at 40, but now it is turned from 36, slightly ahead of 40, but it's now trading around 46 or 44 now, so which is a good sign. Normally wave 4 termination in an uptrend would see the RSI hovering around the 40 mark, which actually bottomed out around 36, and now it's picking up above 44, 45. And in a downtrend or the falling market, wave 4 typically ends around the 60 region. So we will have a look at the dollar index just in a moment when we flip the chart there. All right, so that's the case, and that's the story. How the dollar index, or sorry, how Euro USD would be wanting to move. It's just a matter of time because we've been waiting for this wave 4 termination, and it's just a minor pullback, which is maybe having one more low left in it, possibly towards 0770. That would be a wave 4 termination, and thereafter it would be wave 5 pushing higher through the 1.12 zone. All right, so we would be wanting to we would be waiting to see price action rallying above 1.12 in the next few trading sessions. All right, now trading point of view, if you haven't done yet, it would be good to buy right now and also add lower if prices decline towards 1.0770, which is wave 4 of 1 lesser degree. And in terms of stop loss, it's almost the same level. If we talk about the sub-minute wave or the minute wave 1, they're both at the same levels. You can just choose to place your stop loss at 1.05, just below that minute wave 1 termination, which would be suffice if it is an impulse unfolding, and it definitely is an impulse unfolding. So prices should ideally stay above minute wave 1 over there. All right. So that is the story as we move into the London Times for the Euro USD. Now let's pick up the dollar index, and specifically I would like to watch out for the RSI and wave 4 Fibonacci ratios. All right, straight away, if you go on the Fibonacci levels, wave 4 has almost tested the 23%. It's actually lagging behind the euro, unable to push through the 50% or 38.2% retracement around 104.90. But even if it does so, I mean, it has got all the reasons to be able to do so. And but the only difference between the Euro Elliott channel and the index channel is that it's already tested the channel and it's possibly turning lower again. So that it's quite possible that a lower top is in place in terms of intermediate, uh, not intermediate, sorry, sub-minute wave 4. And okay, this is what I was interested in looking at. If you look at the other side, is turning lower from the 63 mark, and that would be an indication of a potential top in place, uh, possibly wave 4 sub-minute degree, and RSI turning from 63. So it is kind of a confirmed indication where two things are matching up. One is the 23%, second one is the pattern, expanded flat, almost looking complete. The third one is the RSI, and possibly now push below or turn or drag below that 103.15, 16 would be a confirmed signal that wave 4 is underway, and the potential target for fourth wave to terminate would be around 100.80 lows. Please remember, sir, that is wave 5 of sub-minute degree and wave 3 of a minute degree. We are going to see wave 4 of a minute, wave 5 of a minute, which would be wave 3 of minute, that is this one. Alright, so two more waves after this, which would be wave 3 of a minute and then wave 4 of a minute and 5. So by the time, believe it or not, the fifth wave of a minute degree completes, we would be comfortably trading, I think, below 97 or close to 95 levels going forward. So we need to just keep in mind that the current position that we are building is for the long term, or sorry, it's for the positional traders, because if we keep getting out at small levels or intervals to re-enter, as if we've already raised to small shorts positions, just in case if the price rallies towards 104.90, we would be able to sell there or add there again. All right. So that is the story in the dollar index, and we can now move ahead with gold. Sorry, not gold, but pound. I think pound has turned higher already. It has been quite resilient, but at this time it came pretty close to 23 or 28, 23% retracement. A Fibonacci 0.28, 23%. And with respect to the price, it has tested the 28.30, which I think which is the biggest drop in a retracement until in the last 15 days or so. And now you can see prices turning higher again. So this is with respect to the price, we are convinced that a bottom is in place. And point number two, with respect to the RSI also, which has turned higher from the 35 levels, dropping three waves, nice little three waves, and now it is trading close to 49. All right, so from 35 it has rapidly raised to 49, which is a kind of indication that bulls might have just be back in control, and if it is correctly done, then prices would stay above 3200 or 3300 possibly going forward. All right, so that would be one of its kind rally in the next few days, where we have potential entry already done around the 28 or close to 2900, let's say, and moving towards 3300, so that's 400 points a rally which could be materializing in the next few trading sessions. Now, the protective stop loss ideally goes below that wave 1 minute, just below that, which is around 1.25. So 400 points of risk versus 400 points of reward, and actually reward is not 400 points, brothers. It is extending, or it should be extending easily above 1.34, 1.35 going forward. All right, so that these are the four high potential, high probable trade setups that we've got trading interests on. And talking about Bitcoin, uh, the Bitcoin is now kind of pushing ahead. That shallow retracement could be complete, but we are still not very sure, and we are not really keen to buy at these levels around. Also, around 96. I mean, if prices manage to push higher from here and reach the 96,000 mark or 97,000 mark, I think we would be more inclined to go and sell at that point, and uh, and that would be potential wave two. It could be in the vicinity of 91 and 95. Yeah, 91 is the termination, potential triangle termination, which could act as a magnet for price action to to draw closer, and 61% is the 95,000 mark. So both of these levels are quite important, quite vital. So if bulls are able to push through the 91s and 94s, we'll be very keen to enter short positions there with a stop loss, potential stop going around the 109. So ideally, what could happen is maybe just for a moment I'm going to push wave 4 here, right, or turn wave 4 there. That would be the first wave lower, followed by the second wave. So minute wave 1 followed by minute wave 2, and ideally prices would turn lower towards minute wave 3, all pushing or turning lower all the way towards uh, I think it's going to be 60,000 or 50,000 going forward. Right, so that's a trade plan for Bitcoin. Another possibility that we are looking for is the corrective wave is still not complete. It might be turning as an expanded flat. In that case, prices would drop lower towards 80,000 from here, not rally towards 91. And around the 80,000, 81,000, we would be keen to buy again with a risk just below the 76,000. So we are watching two levels, 91 on the top side, 95 on the top side to initiate short positions with a stop around 109 and potential target around 70 and 60. And if given a chance uh, and prices drop towards 80, we would be keen to go long there for an extended counter trend rally back towards 91 and 94 with a stop around 76. So at this point in time, as we speak, we are trading in between. So it's good to remain aside and wait for further price action to confirm whether bulls are pushing here, pushing through the 91, 94 zone, or bears are successful to drag lower towards 80, and then we pick it up from there itself. All right, so that is the story in the Bitcoin. While the dollar index, Dow Jones, sorry, not the dollar index, but the Dow Jones. Okay, Dow Jones is also picking up, so it's not a bit of surprise right now that this week could be another rally where the retracement is shallow around 50%. So this entire rally or wave could be a corrective zigzag. We've got wave 1, 2, sorry, I think we've got 1, 2, 3, 4, 5 already, and A, B, and wave C is underway now. Possible, it's quite possible that the last wave is working out, which could push prices towards 43. We'd be very keen to look out for prices rallying towards 43,200 mark. You know what? That would be a lower degree wave 2 or minute wave 2, and it's even a better time to see prices rallying towards 43. Right now, it's 24th of March, Monday. By Friday, if it manages to push five waves, like this is wave 1, and then we have wave 2, something like this. Let me just try and draw a curve here. Wave 1 is complete, wave 2, uh, 3, 4, and 5. So if by Friday we see that 5 wave rally come through, I think we can get rid of the other one. Alright, then it's going to be very interesting. Why? Because it's going to be the end of March series, and come April, we we might witness uh, uh, the biggest or the huge or the biggest, I would say, the largest decline or turnaround, or possibly that we've seen happening in the Dow Jones last time in 2008, when they we just remember it as a Great Depression. All right, and sometimes it also reminds me of 1929. Of course, we were not there in 1929, but we've seen the charts then, and that was 1929, the Great Depression. Uh, is also to be forgotten, maybe, because in terms of magnitude, when you say when Dow Jones was trading at 1,000, and it dropped 500 points or 600 points, that's a 60% decline. And right now, when Dow Jones is around 45, and another 70 to 80% decline would be more in terms of magnitude, in terms of percentage, than the number of points it drops. Okay, so in that sense, it would be more than 1929 decline as well. So, ladies and gents, it's not about Dow Jones or SPX or Nasdaq uh, having potential bottom in place, and now they are going to revive through new highs. It's a vague thinking that most of the traders are having right now, that we are out of woods, bottom is in place, and now we are moving higher towards a new high. Got to be very careful in building long positions. I think 43,300, possibly 44,000, and it should be it. All right. So those are the stories. We'll be watching Bitcoin and Dow Jones on the higher side now to turn short. Meanwhile, we are long euros and short the dollar index, and long pound, and for a short term we are short gold, planning to revise a turn higher from 29.90. And these are the summaries of trades that we have in our plates right now. All right, so let's bring it a pause here, and we will be now back in a few hours from here to touch base during New York session 2. Until that time, as always, thank you for tuning in, and please do take care and God bless. Goodbye.